Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Today is Thursday, April 25th, 2024. Today, importantly, GDP for quarter one came out, and the actual number was 1.6%. Last quarter of 2023 was 3.4% growth, and the expected for this quarter one was 2.2%, and instead it came in at 1.6, and the market sold off a bit here. Gareth mentioned on his show, and funny enough, earlier today I was looking up the same thing, regarding stagflation, because and so I'm not alone in how I'm seeing things here. I love it when I'm thinking about things and then I see other people talking about it in the news. It just means that I feel like my head's in the right place. But anyway, the idea being that, okay, if GDP is shrinking and there's still worries about inflation, stagflation, comes to mind. And so we'll see how things happen. I'm still expecting inflation to subside here. I don't think we have enough things going on to keep stagflation going. I mean, if we do end up in a stagflationary period, what will probably happen is it'll start to get into the news. People will be upset that the government is continuing to basically spend too much money, and we go from there. And from that point, what happens? Does the government start actually lowering their spending? Do we raise taxes in order to deal with the deficit? Yeah, so all those things are kind of in investors' minds right now. It did cause investors to worry, but I personally don't think that's what drove markets lower today. I think it's more of things just settling before the more important data coming out tomorrow, the PCE. Everybody has all their eyes on the PCE. Looking at a chart of GDP growth rate here, back in quarter one of 2022 is actually negative 2%, and then we popped up there. And if we go out to a 5-year chart, it's like nothing monumental is going on here when you zoom out. So I think of this as mostly unfounded worrying coming up in people's minds about this. Days like today, they just really don't matter. We're waiting for the PCE data to come out tomorrow. The other big piece of news coming out, of course, though, today was some earnings, especially Alphabet, Google. So their share, we'll go over their stock and the jump in it, and it was equally surprising as yesterday looking at Meta and what was going on there, and Tesla the day before. But the headline I just wanted to bring up was Alphabet said that its board approved a cash dividend of 20 cents per share. I mean, for the price of the shares, that's very low, but for me as an investor, I like that. I like that the company is like, hey, we're going to pay actual money to our investors. The people that own the company actually get profit. I applaud that. I think there are too many companies that are doing the buybacks, and it's like, for me, it's not a real reward. Of course, with buybacks and the share price goes up, you can sell some of your shares and say to yourself, okay, that's my profit. Yeah, you can do that, but you're depending on the price going up when that happens, and it doesn't always work out that way. Cash dividends, thumbs up. Graham would approve as well. And of course, saying that it intends to pay quarterly cash dividends in the future. Bravo. So yes, and then of course tomorrow, everything is just waiting for PCE. It's not really even worth looking at charts very much today, but we'll do it anyway. We'll start with the S&P 500, just because still within it's an inside day or inside week. These are weekly candles here in front of this very bearish week we had last week, telling me that still the most likely direction of this is continued downward movement. I said yesterday, HYT looks like we had tested the bottom of this tail here of last Thursday on this Tuesday, and yesterday's candle kind of showed that we were rolling back over, and it is. So high yield corporate, this is smarter money than the stock market money. This is bigger money. This is literally smarter money deciding what the risk is for lending to smaller businesses. And so we're seeing what I see as a healthy bear market developing. It will be very interesting to see how Fed funds futures react to tomorrow's PCE data if things change. Things have certainly been going kind of crazy lately, back and forth in the Fed funds futures. I'll zoom in so we can see a little bit better. I find it notable that the blue is where it's is expected, the highest probability. So we now have 2 cuts. The Fed had been talking about, just as a reminder, 3 cuts in 2024, and now we're not seeing a second cut until March of 2025. And if this trend continues, yeah, it'll be interesting. Maybe the long end of the curve will rise above the short end of the curve. And if that happens, all the bonds I have will lose significant value. But I don't think that's going to happen because it doesn't typically pan out that way. The fact that I'm finally fearful on yields breaking out higher tells me I'm probably on the wrong side of it. Your emotions are oftentimes the opposite of what happens. So I still think we might be peaked out in yields here, but I did mention yesterday that I did not think we would get above 4.8% yield on the 30-year Treasury bond, and we did break above that today. So again, that number for me, it was a target from a previous pattern that I had observed, and coinciding with top of a channel in the 10-year, I thought this was going to get strongly rejected here, and it hasn't. Not yet. Again, like a day like today, it's like worry money, right? So the 30-year bond yield going up this high, it's like, well, what if PCE is like really, really high, and we have to worry more about inflation? It's like preparing itself for the worst news possible. And so again, I still think we're at you might hear me say this a lot in future shows. I don't know. It's not like I'm the guy with a crystal ball, but yeah, tomorrow we'll see how that report affects things. Zooming out on the 30-year Treasury yield, yeah, it's important to not count your chickens before they hatch, but I still think there's a high potential for this to end up being left shoulder, head, right shoulder, and then breaking here to go perhaps as low as 3% on the 30-year Treasury yield. Again, nothing I say is investment advice. You are responsible for all of your financial decisions if you're an active investor. There's probably more to it than I know, but I do find it interesting that the very tail end of the yield curve is uninverted from the 10-year out. So, but also the fact that the 20 and the 30-year bond yield are inverted. So it's what it's saying is that in 10 years from now until 20 years from now, we see like a normal situation where further out on the curve has higher yield. But then from 20 to 30 years from now, that decade, it's seeing another slowdown. So, looking out, it's not really, there's not a whole big point to look trying to see that far into the future. Again, like I've mentioned in previous shows, like the seeing 10 years out is also like that's like the absolute maximum. Beyond there is like, outside of the universe, kind of far away. It's hard enough to figure out what's going to happen in the next 6 months, never mind the next 10 years. But I digress. One thing helping my viewpoint out that we might again be at the top in yields here is actually the price in the RSI of TLT. And so from Tuesday, April 16th, until today, you can see clearly we have a lower low. And in the RSI, we don't have that. We have a higher low. This is one of those divergences that say that this move down is most likely wrong, and we should actually go up from here. Notably, Google or Alphabet, whatever you want to call it, coming out with their earnings and their dividend announcement is up 13.5%. This is a very ginormous move because it's a market cap of almost $2 trillion. That's a lot of market cap added to the value of Google. And as you can see, once again, it affects the entire value of the NASDAQ, the QQQ, and after hours is up by 1.2%, 1.3%. Look out for that PCE data coming out tomorrow. It could make things pretty wild. That's all I have for you for today's show. I hope you enjoyed watching. Thank you for watching, and see you next time. Robschild.